Good afternoon, everyone. My name is Bruce Lynn. I'm one of the managing partners of the Financial Executives Consulting Group. We're going to start the main body of our presentation in just a moment. We've got a lot of people logging on, so I want to give everybody a chance to get through the door. For those of you who have logged on, you are in mute-only mode, which means that you can hear me, but I cannot hear you. We have a formal presentation today, but if you have questions, please type them into the question box on the lower right-hand side of your screen, and we'll get to them after the formal part of the presentation is over. With the number of people we have, we might not get to all the questions, but if you type them in, we'll certainly take them offline. And if there are very specific questions that you don't want me to read out loud, please type them in and or send it to me after the presentation, and I will take them up with Scott and Jamie, and one of us will get back to you so that indeed all your questions will be answered. And if you're asking, this is recorded, so you will be able to revisit this and also listen to the Q&A at the end. And if you're looking for the presentation, it should come out in about another 48 hours or so. So with that, I am going to go away for a moment, come back, and we'll start in about the next 2 minutes. Good afternoon, everyone. For those of you who have just joined, my name is Bruce Lynn. I'm one of the managing partners of the Financial Executives Consulting Group. We're going to start the main body of our presentation in just a moment. Today, we're talking about combating uncertainty through the use of rolling cash forecasts. With today's world, no one knows what's going on. My crystal ball is in the cleaners, so I'm not a good source either. But I think, as the old joke goes, if you can't forecast accurately, forecast often, and you certainly want a dynamic aspect to this. So we're going to go through this in just a moment. You are in mute-only mode, which means that you can hear me, but I can't hear you. If you have questions during the presentation, please type them into the question box, and we'll take them in the order in which they were submitted. If we don't get to them, because we've got a lot of people today, we'll take them offline. And if you have questions that you don't want me to read out loud, just send me an email and we'll certainly take those offline. The presentation should come out in about 48 hours, and this is recorded. So if you miss a part or have to go away and answer a phone call, not a problem. You can listen to the encore performance. So with that, let's get started. And I want to introduce you to Scott Collada, who will introduce you to Prophix. Scott, go ahead.
Thanks, Bruce. And yeah, I just want to echo those sentiments. Thanks, everyone, for taking some time today to attend this webinar and sit down with us for a bit. We are going to be focusing on cash flow and rolling forecasts and really the intersection of the two. But before we get into that, I did want to just introduce everyone to everyone that we have on the line here. So, of course, you've heard Bruce. It's myself, Scott Collada, speaking right now, and we also have Jamie Leverage on the line. We're both from our channels and alliances team here at Prophix, and Jamie's going to be actually diving into the software with us later on. I am going to spend a few minutes here to share where Prophix fits into an organization's architecture, but before we do that, I am actually going to throw it back to Bruce. We thought we'd paint a bit of a picture here on what the new normal is looking like and what finance teams and organizations need to be thinking about.
Thank you, Scott. Yeah, I think we just want to set the picture here. This is what I call sort of theory and practice. I mean, talking about cash forecasting is good. Cash forecasting has been sort of a #1 priority on everyone's list for all the surveys and years that I've seen it. So you ask yourself, well, where is the problem? Why is it so difficult to implement? And there are a lot of issues, and I think the first one is really a priority. Why do it at all? I've got certainly other things I can do, but I want you to see this survey that Ernst & Young did earlier this year, and I just want to direct your attention to the last 2 items here, in which the vast majority of the people that they've surveyed really are thinking that, let's look at our business. Let's do a little bit more updates on whether our business is an ongoing concern, or maybe I've reached a point where I really should exit. I mean, at the end of the day, it's a make or buy decision, and if you think there's business there, then you should continue to invest in it. But that requires a strategic review. And interesting enough, that's the last one there. I was a little surprised that in this environment, obviously over half the people surveyed say they're actually thinking of buying it as opposed to making it. And obviously which one you do depends on your current businesses and how you look at what business you're in. But values today arguably are reasonable. That's the word I want to use. But that requires, reasonable is in the eye of the beholder. So let's just go to the next slide here and find out how you're going to actually finance this acquisition if you're going to do it. The banks may not be exactly where you want to go first off. This is a slide that Bloomberg put together, and this is again for like a 6-week period between the middle of March and sort of the end of April. And what it shows you in the blue is that some of the credit-worthy customers have started to draw down on their revolvers because they're concerned about their liquidity. How are they going to make or buy the thing that they need to stay in business? To me, the most interesting part about this slide actually was the brown part, in which the banks are saying, yeah, we're legally obligated to lend you the money, but what do you think about a new loan? Now, exactly who's offering what to whom, I'm not sure, but look at the way that this brown part is sort of widening out from, let's say, the beginning of April to certainly the end of April, which means that the banks are saying implicitly that, yeah, maybe we shouldn't have given you that loan at the terms that we did, so maybe we'll give you twice as much, but you have to agree to new conditions. Like an anti-cash hoarding or a LIBOR floor or mandatory repayments or some other non-financial covenants. So I think the takeaway for any company looking at their strategic review and forecasting the future is going to have to consider that I can go to my banks, but they might be a little tougher to negotiate, or I could look at improving my own operating cash flow. So these are the kinds of alternatives you have to explore. And I think what we're going to do later on is talk a little bit about what kind of tools you might want to use to do that. So let's go to the next slide. Again, everything is relative. When you're looking at whether you can finance growth, you have to think of yourself, what kind of KPIs do I want to use? Now, I'm not going to go down all 10 of these things, but I think there's 2 issues that you should consider. One is you ought to have a KPI, and it goes beyond just market share or EBITDA. How about cash on hand? How about free cash flow? A lot of companies are really cutting back on dividends these days. Why? Because they need free cash flow. I think free cash flow is a little bit of a sort of a misnomer, because what is it free to do? If you have to pay down your banks, you're not really free to do that, but it certainly is a priority. So having these kinds of KPIs makes sense. And then I would leave you with the last thought is, how many of these metrics here can you get out of your ERP system or out of your treasury management system? And I would argue the answer is 0. So how do you do all these things? How do you measure success? And I think you need a tool to do that. and spreadsheets would not be hit. So with that as a preface, let me turn it back to Scott. We'll talk a little bit more about rolling cash forecasts. Scott, go ahead.
Yeah, thanks, Bruce. And I think we'll definitely be referring back to some of those sentiments there, but those were great insights. And before we get really into the meat of the webinar here, I did want to just give everyone a little bit of background on us here at Prophix and the current challenge that we address for organizations. And to do that, we like to take a look at what an organization's current process might typically look like. And that's that typically organizations are conducting their budgeting, forecasting, reporting, and analytics in spreadsheets. There's nothing inherently wrong with that. It can be more than adequate when an organization just consists of a small number of people or one entity or just a few data sources. But over time, what's going to happen, as all of you know, is things are going to become more and more complex. So we're talking about multiple systems, we're talking about multiple entities, maybe you're growing through acquisition, and as you add more data sources, be it payroll, ERPs, CRMs, HRIS systems, and the like, and more people as well across the organization who are going to need to be viewing and receiving these spreadsheets at different functional levels, when you're using a really static system like spreadsheets, you're going to come to a point where things are going to start breaking. Accuracy of your data and insights is going to be diminished, and version control and security issues is going to start to crop up more and more frequently, and you're going to get nice reference errors like this. So I'm sure some of you are shaking your head at this, hopefully up and down. But of course, with a system like ours, with a CPM solution, a corporate performance management solution, it doesn't have to be this way. To speak a little bit about to where we fit into an organization's architecture, we sit on top of your existing ERP system. So we connect into your GL tables, we're consuming that financial data, and then really providing integrated financial planning, connecting all of those disparate data sources that you might have, and then allow you the ability to do things like what-if analysis and scenario planning and build forecast models, do driver-based budgets, and just be able to bring forward all of that data from multiple sources and really compare apples to apples instead of having everything siloed off. And then with all your models built, we can then output to your standard Microsoft Office tools. We've got, as you'll see in a little bit, a very Microsoft-y kind of look and feel. We're built on Microsoft, and access Prophix through any modern web browser as well, even mobile or tablet device. And then of course, users have the ability to drill back into the transactional level of detail through Prophix. And one point I also want to mention here, it was something we were talking about right before we jumped onto the webinar, is that we are a cloud system, and right now our implementations are being done remotely as well. So we've got something like 20+ projects currently on the go. So we're not skipping a beat with everything going on right now. We can transition to remote, and a lot of organizations are seeing the dividends of moving to more of a cloud-based system for a lot of this planning. So as we get into it, market dynamics have, of course, and can suddenly change, and you need to be able to act fast. And many organizations today have had to go back to the drawing board. You've had to reset your revenue expectations. You're maybe extending customer credit payment terms. You may or may not be incurring unforeseen costs. And this is the time where determining your liquidity situation really is king. You need to be asking yourself questions like, if revenue drops, what will the impact be on earnings, staffing, capital requirements, and most importantly, your cash position. So every minute you don't act, it could really cost you. To help expedite your business's ability to react to changing markets and plan better, there are 3 elements to really do that successfully. And that's the people that you have in place, the processes that you have in place, and the technology. So the latter 2 are what we're really going to focus on today, with cash flow and forecasting being the 2 through lines. So spend a little bit of time on cash flow here. Cash really is king. No matter what your business goals are, cash management is going to have an essential effect on how quickly, or slowly you can reach them. And adequacy of cash really defines whether business activity continues, often totally regardless of profitability. Yet many companies do not compile cash flow forecasts, at least not regularly. It's often thought of as a difficult task. Every company would like to know what future cash flow looks like and when goals can be expected to achieve. But in a tight situation like we're all in, implementing a cash flow forecast, it really becomes a necessity. Each department also has a role to play in your cash flow planning, but when, again, you're using siloed off systems and cross-departmental planning and collaboration can be really, really difficult. So you need everyone to have access to the same data and the ability to input information quickly, avoiding an error-prone and manual process. And then your balance sheet. That provides crucial insights into how much money your company actually has to spend. But again, gathering that information from numerous sources can be really time-consuming and hard to organize. So when you're using a system like ours, you can easily collect and organize financial details from operational areas and allow for a more detailed and accurate balance sheet forecast of cash. And then, of course, forecasting. Another crucial aspect of business operations. It can be another difficult one to get right. Often manually created forecasts are unfortunately out of date not too long after you complete them. But with an accurate forecast, you're really able to gauge how well you're doing today, or conversely plan for your business's future. So with Prophix, you can create rolling forecasts, multi-year, daily, or driver-based forecasts. And like so many here today, the forecasts that we at Prophix built and put in place only a few months ago are now pretty much obsolete. So given the fact that conditions are changing so rapidly, your forecast should have the ability to quickly adapt as well. So I think this is a good spot where we can kind of get into the meat here on how we can not only help to simplify and streamline forecasting in Prophix, but also make it easier than ever to do things like rolling forecasts and cash flow forecasting. So I am going to flip it over to Jamie here and give him the presenter, and he'll have the demonstration pulled up and we can get into it.
Perfect, thanks, Scott. And I'll just wait for a quick check from Scott or Bruce that I have my screen up and everyone's able to hear my voice.
Yep, looks good.
Perfect. And thanks. Yeah, Jamie Leverage speaking now, also from Prophix. And what I actually have pulled up as well is a fully built, albeit with kind of dummy or demo data, if you will, Prophix environment. First things first, you can see I'm just in I'm in a Google Chrome here. You can really use any browser, but I really want to focus on what we've kind of been addressing or leading up to today, which is cash flow forecasting and really what that looks like in Prophix and in a CPM system. Bruce obviously kind of outlined the why we need to address things and kind of what the environment is. Scott talked about the what do we need to do to now address that environment and be nimble and be agile. What I'm really going to be addressing in here now in the product is the how. How does having access to quick and agile forecasting capabilities and the ability to make slight impacts on your cash flow and on anything else and being able to monitor in real time, how does that now affect the environment and make us more nimble? And the first and foremost that I will kind of reference here is that, like Scott said, everything that you're seeing here on my dashboard is interactive and is live data from a data source. So our clients are bringing in their general ledger data, their accounting system data. It's getting modeled in a series of calculations and aggregations that is all done within Prophix. And from there, all the dashboarding, reporting, and workflows that we would build in are now automated. So gone are the days of having to do a fresh dump and set of spreadsheets to build out a pivot table and build out charts. This is now all modeled and maintained directly by the software, which kind of leads me to my next point as well, that at its base level, we use a lot of different acronyms, CPM, EPM in the industry that kind of are just fancy words for data modeling tools with a finance spin or a finance orientation on them. And what's great about that is that what we've essentially done is added a lot of shortcuts and out-of-the-box functionality that go into modeling the key financial factors in running your business. So if I go into my actual model manager here, which this is very much an admin capability here, what you'll see is not only do I have all the aggregations that roll up into the different sections of my general ledger here, but I also have the logic by which I want certain things to be calculated. So within my cash statement, what I will actually be doing is really just saying, how do I want to calculate increase or decrease in accounts payable? And with simple cell references or simple account references here, all I'm doing is just saying I want accounts payable from my current period balance sheet less the previous period balance sheet. And that's how we're actually able to construct out a fully interactive balance or cash flow statement, pardon me, within Prophix. And what's really great about this is that we actually then also have the luxury of not only having this come in and calculating on data as it's flowing from our ERP, but we can also say, what about in plan sets? So now looking forward and forecasting, which is kind of one of our big topics today, how do I actually want to calculate this now? And that's where we're able to do driver-based budgeting. We're able to include in adjustments and different things that we might be wanting to do at a more detailed level, but still have the luxury, again, of comparing apples to apples, going plan versus actuals, going forecast versus actuals, and essentially with an unlimited number of layers to the data, we can see in real time how things adjust. Anyways, I'll jump out of here now and actually kind of get into the what that looks like from an end user perspective. So again, coming back to my dashboard, everything that's being displayed here is actually, again, just actually displaying based off of those charts or those roll-ups that I just had in my central model management. What this allows me to do is actually say that, okay, cash at the beginning of period is being calculated based on actual data that's coming in from my spreadsheet, or sorry, from my accounting system and being calculated out on a regular basis. At the same time, what I'm looking at in terms of cash end of period and my net change in cash here are all just rolling forward. And what's really great here is that you can see this is actually looking at the months that have not elapsed. So how do we actually get underneath the covers and see what's in this data? Again, all we need to do is just ask Prophix to take us to the lake template, strip away kind of the formatting and the fanciness here. And what I'm presented with is my full budgeted cash flow forecast. Again, a few things to note here. I have essentially my full set of accounts here that are going to have any impact on cash. All of this is calculated centrally. But again, what I have the ability to do because I'm performing a budget is actually make adjustments as I go through here. Obviously, what's handy about this is that we now have the agility to, as data comes in from our system of record, incorporate that into the plan, but also make adjustments that might not yet be in our ERP or anywhere else. It's just something that people in the organization know. I have, again, a few different options of how I want to impact this and how people now can interact with and contribute to a cash flow forecast. Keeping in mind, again, that I'm assigning this to specific users, specific people that are going to have security only relevant to their entity or their department. That's one thing to kind of preface this whole interaction with, is that this is not available to everyone. But to those who it is, I can have things as simple as just saying, tell me what the line items that are rolling up to my advertising adjustments are. And really quickly, I can just see a brief description, in what period the money's being spent, and I'm off to the races. In some cases, this might be good enough. It might be the level of detail that we really need to get to if we're just kind of doing a quick, fast cash flow forecast. Like Bruce was saying, I think right at the beginning, sometimes when it comes to forecasting, if you can't do it accurately, you need to do it often. In cases like this, that's where we encourage clients, absolutely just get something that users can come in, provide a little bit of detail, and we can see the impact once everybody's made their contribution on cash. Where are we going to be in 3 months? Where are we going to be in 4 months? And so on and so on. But where we can go to a really high level of detail and where we can really kind of go under the covers almost of what goes into cash flow forecasting is by creating a model where we can actually go invoice by invoice and have people preemptively suggest where they think cash is going to be spent. And again, what's great is that you can actually do both in one interface. So within here, if I were to add in another line, Prophix will immediately prompt me and ensure that I'm entering in all the required data fields. I can assign it to a specific entity, a specific department, put a certain date and term on things. So here, for example, I'll just do 30 days from January 1st and do 100,000 and enter in. But not only that, I can also then even go to the level of assigning it to a project or vendor. This screen is really, really configured to how the client wants to assign cash flows in and out of the organization and give us a lot of auditability into not only at a high level like I had over here, but when I really want to get into the details, see why do we think that we're expecting cash in or out the door. All I need to do now to push this into my incorporated plan back over here is select whether this is a receivable or a payable. Just quickly make this a receivable. Hit calculate. You can see the calculations that I have over here are now actually being rolled up and aggregated. Hit update. And now, because of the way Prophix's architecture works, I can come back over here, and as users are doing this in real time, as an administrator, as an FP&A professional, or somebody who's overseeing cash, I can see new data flowing in as people are making contributions, making suggestions as to where they think cash will be coming in and out of the organization. So a lot of power within being able to do this. Let me take 2 seconds now and just kind of regroup as to where we've been. We're able to take from dashboard KPIs, get straight into the data. We have an easy spreadsheet interface for users to come in and make adjustments in real time, providing full auditability, providing full levels of detail, or doing it fast and just really getting numbers in as quickly as we can to give everybody in finance a better idea of where things stand. That's fantastic. We love that ability in our system. Our clients do too. Where we can really take this to the next level, though, is the next topic that we've talked about in the form of rolling forecasts. If you guys recall in that previous pane in the model manager that I had pulled up, we'd been talking about having layers or having different plan versions of data. This is where Prophix really shines, is that once we have data, now, for example, where we are now in the first few days of May, and we've closed everything out from April, we actually have actuals from our reporting system, from our accounting system. I don't need these adjustments that I've made only in my planned version anymore. What I need is my actuals from my system. And now to be able to have people come back in and make further adjustments on the remaining months of the year. And within Prophix, as you can see right there, all I need to do once I have that new layer of data that's coming from my other system, my accounting system, all I need to do is click into this new version, and I now have the most recent data without having to concern myself with where we thought we would be. But anytime I want to, I can just as easily go back and say, what happened to this $230,000 in payables that we'd anticipated back in March? I have full auditability into all the previous versions and layers of the plan that we'd created, while still also being able to incorporate in actuals as they flow over from the system. So huge amount of agility here, the ability to essentially have planning on iterative processes where all we need to do is have things out in a workflow once a month, and everybody who's relevant would receive this invoice schedule or receive this cash flow forecast and be able to make their adjustments. I'm now essentially off to the races. I don't need to maintain multiple different spreadsheets. I have this one report. I can distribute it out to all the people that need to make different adjustments here. And from an admin perspective, what I'm presented with is a full cash flow statement with a set of adjustments, a layer of details and information that I otherwise would never really be able to track down or would be collecting from potentially 10, 20, 30 different spreadsheets in an organization. To kind of bring this out to a close now again, just as I kind of wrap up the product section of this presentation. The next piece of the puzzle actually brings me back now out to my dashboard. We've had a dashboard that alerts us that we want to go and see the level of deeper data and be able to make adjustments on the fly and update this plan ultimately that gets presented to me. But then, as Bruce was talking about as well, right towards the end of his presentation, there's also certain KPIs here that I want to have them live, and I want to be able to now slice and dice and analyze the data. Again, because of the way Prophix is architected, I don't need to worry about creating a report. I don't need to worry about having things into a fully formatted dashboard if I don't want to. I can on the fly do analysis on any of the KPIs that I have in Prophix. So for example, taking my cash on hand here, all I need to do is click into there, and I'm presented with essentially what I was just looking at, my cash for the end of the period at April. And all I need to do to completely repurpose this report and start my analysis is drop into my pages where I now have my different filter fields, click and expand, and I can now see what's breaking out to my cash at the end of the period. And to even go a step further, if I want to be able to slice and dice things out, all I need to do is drag and drop over here, and now I can see how cash is broken out, not just by the holding company, but by the various subsidiaries. Again, all of this as well is actually being sourced from the actuals in our 4+12 plan. So it's where we stand today. It's where the system that is that's actually absorbing all those invoices and all those cash transactions is now hitting our system. It flows through all the different calculation logics, and we're still able to quickly and nimbly see where do we think we'll be. Do we want to adjust this out and see where we think we'll be in 3 months? We have that option to now bring that in and have that as a filter within Prophix. This is really the ultimate goal when it comes to now managing your business. So after the planning and the iterative forecasting process has gone on, is that you now have the access to get to this level of detail within a couple clicks. And this should be really the goal that everyone is working towards as we kind of go through times that, as Scott was saying, are really uncertain and we don't know where and when we might need cash, is understanding where are we today, where will we be in 3 months, and where will we be in a year. And that's really the crux of what we're trying to build up to here. Scott, Bruce, before I hand it back, was there anything in the system that I might have kind of skated over?
No, I think we're good, Jamie.
Perfect. Then with that, I appreciate everyone listening in, and I'll pass it back over to Scott.
Thank you, Jamie. And I'm just pulling up my screen here. There we go. So I think we are going to wrap a little bit early today, but before we do, I just wanted to kind of put a bow on everything, just that we covered. And I thought that this was really a great graphic to have up. Don't worry, I'm not going to go through every single point here, but I thought it just really nicely illustrates what we bring together and really the 4 key pillars that we see. Of course, we dove deep into cash flow and forecasting, and we may have hit on your business need. You may see other areas here that are more pertinent to your business and your current setup. I know we only kind of touched on the tip of the iceberg today, but really overall the message that everyone can take, and if we've done a successful job, is that CPM systems, corporate performance management systems like Prophix, are a way better tool to help facilitate much quicker and more accurate planning, especially needed kind of in these uncertain times. So I think with that, we'll move on and see if there was any questions that we can maybe address, and kind of take it from there. And if we give people some time back today, I think that's okay as well.
Okay, we do have some questions that have come up, so let me see if I can take them, and either you or Jamie might be able to answer them.
Perfect.
Does it mean that Prophix can forecast at the individual vendor level?
Sorry, Bruce, can you say that one more time?
Does it mean that Prophix can forecast at the individual vendor level?
Yeah, great question. So everything, like I said, in kind of the environment that we were working in today is very much a demo environment. It's generic. It's not configured or customized to a specific client. What we actually do as a part of every implementation is go through what are the critical factors by which you need to analyze and plan for your business. And in many cases, yes, when we're doing revenue projections, a vendor would, revenue projections, if we're looking at procurement and managing our inventory, what vendor we would be acquiring our different resources from, 100% would be a filter by which we can go vendor by vendor and plan. We can also do them in different groupings, different roll-ups, and kind of do more of an allocation type process. But yeah, that's a great question, and 100% something that we would address with a lot of clients.
Here's another related question. Can you view variances versus actual at the detail level?
Yeah, and so essentially at whatever level of detail that we have in Prophix, in the Prophix model, we can view variances by. So literally some of our clients will actually go general ledger by general ledger account and view variances, almost in an internal audit fashion of seeing who's overspending or underspending on specific items. So not only could we go department by department and entity by entity, location by location, but we can also see where their OPEX spend really was over budgeted or under budgeted.
Okay, here's a question. Does the reporting capability include the ability to see variances from month to month, actual versus budget versus forecast?
Yeah, and again, that's a really good question. So one of the concepts that we have within Prophix, kind of like I was showing before, is that concept of versioning. So having our base actuals, having a plan version, and then having potentially as many plan versions as we want. What we can also do within that field is write in calculations of versions against version or time against time. So really simply put, I can actually write in a layer of data that will consistently and always be our plan versus actuals, or it might be current month versus previous month, or it might be current year versus previous year. That's actually just something that we would write in and always have accessible then to display in a report or in a template.
Okay, in general, what size range of companies would you typically recommend to use a product like Prophix?
That's a good question, and it definitely changes industry by industry, and even with the kind of complexity and the importance of reporting and budgeting between different organizations. What we typically see is we're working with organizations where you're having more than 2 or 3 people really involved in the planning process. So what that most typically means in terms of kind of harder figures is you're looking at 150, 200 plus employees. Our larger clients, some of which have tens of thousands of employees, also kind of able to scale within the system. And most typically in terms of revenue ranges across a few different industries, this is definitely different, but typically where spreadsheets really are not cutting the mustard anymore is around that 40 to 50 turnover in US dollars.
Yeah, I would add that it depends a lot on the complexity of the company.
For sure.
A good perfect case in point is real estate. Usually you have many legal entities, and so now you're going to have whatever the number is, 10, 20, 30, 40, 50 different legal entities. I mean, you can't really deal with that many spreadsheets and try to pretend that you actually can understand what's going to happen, especially if you have any kind of intercompany arrangements. Now, you may say to yourself, well, they're legal entities, and we don't really plan on that. But that's not exactly true. You'd be surprised sometimes about when you have shared service organizations that are really paying bills, and when you don't have that money around, how do you know that? So the idea of being able to look at what I'll call global visibility. So even if you're acting locally, you ought to have global visibility, especially when it comes to things like foreign exchange.
Yeah,
so again,
that's a great point. And just to add to that, and kind of add to my earlier point, that's in Bruce's scenario there, you're not going to have 2 or 3 people that are responsible or even capable in any way of trying to produce a forecast and a budget for managing 50 different legal entities, of which they might only know a handful and have access to a handful of their data on a regular basis, where in our cases, actually integrating them all into the same system is not a terribly onerous process.
Okay, and then I think that here's another question that we can get to. What is the cost of the system to an organization, and does it work with QuickBooks?
The cost is something that honestly is very flexible. It really matters mostly on how many people you need in the system. Kind of like we were talking before, we have clients that come in and they really just need to get away from having 5 to 10 people passing around 4 or 5 different spreadsheets, and it's unmanageable for their finance department. And those systems can come in very, very inexpensive. And then we have others that need enhanced consolidation capabilities. They're integrating in third-party AI integrations that we've built out, and obviously those get substantially more expensive. What I would suggest is follow up after the presentation on a kind of one-on-one basis, and we can kind of get a ballpark figure together for whoever asked that. And then to the second question of that within QuickBooks, yep, we have, I would guess, probably somewhere in the realm of 40 or 50 clients over the years that have integrated with various different versions of QuickBooks. I know one client that came on board actually just earlier this year was on a version of QuickBooks Enterprise.
Okay, we do have one request, and if Scott, maybe can you flip back the chart or the slide that talks about of what Prophix does?
Yeah, of course.
I think it's that slide. Again, the person who mentioned that, if you just confirm that that's the slide you're looking for, and we can certainly keep that one up as we talk.
Good point.
Okay, yeah, a few more questions coming in here. Let's see. Can you forecast for various entities? I'm sorry, can the forecast for various entities be consolidated into different groupings?
Yes, and again, we're getting a lot of very good questions that we've kind of built in little shortcuts to get to. So again, kind of referring back to that model manager page where we have the roll-ups of all the different accounts into our net income statement, into our balance sheet statement. We have a similar model, kind of tree structure, again, for all the different fields by which we can analyze. So in the entity structure, we again would have a roll-up that is our base roll-up. What we built in when it comes to things like entities and things like locations, cost centers, departments, is then the ability to say we might have a reporting roll-up versus a planning roll-up versus our second internal reporting roll-up. So we actually have a lot of flexibility there with being able to do different groupings depending on what the situation is. And those are actually most often user-driven and built because it's actually just done through a wizard interface.
Here's a question that you might stretch your memory here a little bit. What challenges encountered during client implementation?
Honestly, one of the biggest ones is client bandwidth. As much as we've tried to build everything in Prophix to be wizard driven or drag and drop, or you right click and you hit a menu, you know, it really is like any other system. You need to take the time to learn it. You need to learn where to navigate and what to do depending on your role. that is often one of the challenges that we have. If we have the person who's supposed to be administrating the system perhaps is not in finance, or perhaps has, I'll say, a more of a management role as opposed to an analyst role, or a role where they can really own the system, that can be a challenge just because they're splitting time between implementing and managing the Prophix project and working in their regular day job. It's funnily enough actually something that we've encountered a little bit less in the last couple months, just because people do tend to have a little bit more free time on their hands to invest in IT projects, which is fantastic. But that would be one of them. Just thinking otherwise with projects, I would say when we do have new systems that we haven't worked with, of which that's not a very frequent happenstance, but for us, I would say any ERP that falls under the umbrella of Oracle, SAP, Microsoft Dynamics, Sage, and then perhaps some of your smaller or more localized ones, Acumatica, Deltek, Epicor. We have experience across various versions, various different systems, whether they're deployed, I guess, cloud or on-prem. What we do see is can extend project life is when we're presented with a system that's homegrown and perhaps not based on SQL tables. That can sometimes be problematic.
Just to add to that. Oh, sorry, go ahead, Bruce.
I was just going to add to that, which is during the implementation, the one thing you really need to consider is whether you're doing something that you've never done before, or you're just trying to use a system like Prophix to sort of make your same mistakes but faster. In other words, the idea of metrics, and let me use free cash flow as sort of the one of the key metrics that I think is most important when you're doing a forecast. If you don't have a metric like that, and you don't design your system to have one, then I think what you're doing is you're just replicating the processes that you have, which by definition were not as good as they should have been, or you wouldn't have brought in a tool like Prophix to begin with. So you have to sit back and say, what design do I really want? What is the best practice? And then make sure that the 21st century tool can do that. So cash on hand. Okay, I've got $10 million in the bank. Is that enough? Well, compared to what? Prophix isn't going to tell you what to compare it to. It will give you a dashboard that will show you whether it is enough, but you have to define that. So that's the theory that you have to wrap up, or you're going to have a bad plan well executed. And I'm not sure that's a goal for anyone.
Yeah, that's a great point. And actually to add on to that, with probably the most frequent or one of the biggest headaches that we can come up against in an implementation is unfortunately it's bad data. And so to Bruce's point, if the system is already broken or there's already faulty data, as much as we can start to regulate things within Prophix and have things flowing in a consistent pattern, if the base level data is not accurate, there's essentially almost then an internal project that needs to go under, which is cleaning up your own data processes. And that obviously can sidetrack or delay implementations a little bit.
Okay, here's a rather long question here, so let me see if I can ask it correctly.
Okay.
For accounting journal entries, normally just use one account to book debit and credit, no differentiation on cash or non-cash. In order to link to cash, how statement preparations does it? I'm sorry. In order to link to cash flow statement preparation, does it mean when setting up GLs, knowing will link to cash flow statements and forecast, GL setup need to have cash or non-cash subledger, or set up so that we can figure the cash impact?
Okay, again, actually a very interesting question. So within what we actually call our journals manager, we can actually deviate between what type of journal entry we are entering and exactly how that then hits our adjusted financials. And that's kind of an important differentiation there as well. is that if we are doing journal entries there, we can actually decide whether this is going to hit the account in the adjusted cash flow or the unadjusted cash flow. And that is an important differentiation, because everything within Prophix, again, is really based on auditability. So even when we do apply journal entries within Prophix's capabilities here, we actually are still able to report on pre-adjusted and post-adjusted financials. All that being said, if you're actually referring to doing journal entries in another system, that would actually be something that we would need to figure out before we even integrate or before we even pull that data into Prophix's database. We would need to differentiate out based on certain transactions, whether we want them to hit into the cash or not. Hopefully that answered the question. If it didn't, again, feel free to follow up with us afterwards.
Let me put on my treasury hat and add maybe a finer point to that, because I think you're really onto something. And I would just suggest that you have to look at the source of the journal entry. And of course, every entry that comes out of your bank account from your bank is almost by definition a cash entry. In other words, if you have links to your banks through a treasury management system or even through one of their web-based systems, as you pull that information into, let's say, a spreadsheet, or if you pull it into Prophix, if you mark it as Bank of America, Wells Fargo, Citibank, or bank download, by definition, it is a cash entry. Now, you can do adjusting, reconciling entries, and those are non-cash entries. But, and to Jamie's point, you just have to know where the data comes from and consider the source. And so you can easily separate out the quote-unquote cash entries from the non-cash entries running through your bank accounts. And I would just go further to say that, quite honestly, the cash that your company has is actually not on your books at all. It's in the bank. If you can't convince JP Morgan that your balances should be $102 million, then they are what JP Morgan says they are. This puts an onus, of course, on the reconciliation, but now we're getting a little bit away from the tool and the whole idea of how you want to manage your cash.
Yeah, no, that's a great point. I think in summary there, it's the important part is deviating out different types of journal entries and classifying them as they're brought into whatever your system is that you're going to be running and recording your journal entries. So within Prophix, like I said, that's done in our application where we enter in journal entries. If it's done elsewhere, like Bruce said, that's a matter of process there that you need to classify them wherever that system of record is that you're making journal entries.
Okay, here's a question. Would you become a partner with a new ERP integration? In other words, moving from QuickBooks to NetSuite?
Sorry, I'm not sure I totally understand the question. What I will say is if you're talking about from a client perspective, moving from one ERP to another, that is something that obviously happens quite frequently to our clients. And yes, we often have clients that are come on QuickBooks or come on I'll say kind of a more SMB ERP, so something in one of the Sage product lines, perhaps Acumatica, that then are looking at moving up into a larger system, so QuickBooks to NetSuite, absolutely, or one of the Sage systems to Dynamics. That does happen quite frequently, yes, and it's really just a matter then of us remapping and pointing to a different system, and potentially if things like your chart of accounts are changing, then also making those adjustments in Prophix. The handy thing is that you then have access to your historical actuals without having to do any sort of data migration from one system to another.
All right, here's an easy one. Is Prophix multi-currency?
Absolutely. Great question. Yep, we handle whether we're doing multi-currency on balance sheets or on income statements. If we want to do variable rates and month-end rates, yeah, we actually have again kind of a sub application within Prophix whereby everything gets imported in its native currency. You don't need to do any sort of mapping. We run it through exchange rate tables that again can be managed and altered and potentially even forecasted. And the end result is that all of your financial statements are then produced out into all your different currencies.
Here's a question. How does what you offer differ from Alteryx?
Sorry, Alteryx?
Altryx.
Okay. I believe the system that you're talking about is, I guess, what I would call more of a BI tool. I'm hoping I'm not putting my foot in my mouth and ignoring a completely different tool, but it is one that we come up against very infrequently, I would say, when the requirements are really more of a BI project. And what I would say the biggest difference between BI and, like Scott said, what we are, which the industry calls CPM, corporate performance management, is the concept of versioning and data creation. So BI is great at crunching massive volumes of data and being able to quickly interact and slice and dice. We definitely have elements of BI in our software, like you saw on our dashboard over there, with different kind of charting types, but that's rarely the main driver for a Prophix project. Usually the driver there is the ability to take actuals and be able to now say, okay, where are we going to be in 6 months? Where are we going to be in 12 months? Where are we going to be in 5 years? So data creation, I would say, is the biggest, and then the workflow that goes along with managing budgeting and forecasting and reporting cycles.
Okay. And it may not be abnormal either, just to add on to that, for an organization to run a system like Alteryx or Tableau in tandem with a system like ours with Prophix. We do see that happen as well.
All right, here's a question. I think, Scott, this poem's probably for you. What's the average time to implement Prophix? And can you discuss the pros and cons versus adaptive?
Yeah, that's another really insightful question. Again, it is kind of it depends when it comes to implementation, but to give you a rough idea of time, we're not talking 6 months to a year. We're talking weeks. We're talking, for our average, probably 6 to 10 weeks for the most part. Sometimes, of course, we can come in south of that. Sometimes if it's a very complex project, we might be in that 10 to 12 week mark, but that's generally where we're talking from implementation timeline. And then the adaptive question is another good one. We did view adaptive as kind of our main competitor in the CPM space. I think probably since the Workday acquisition, we've seen them move a little bit more upmarket. And of course, a lot of their roadmap is now based on kind of Workday functionality and integrating their system into Workday. So we're just seeing them kind of shift a little bit more that way.
Yeah, just to add on to that, for context, Workday, HRIS, ERP, I'm sure everyone is familiar, at least superficially, with them, acquired Adaptive towards the end of 2018. So they've obviously been working together strategically and probably focusing on a market that is a little bit higher than us, probably more in the $1 billion to multi-billion-dollar entity range, where we have clients, but it's certainly not our focus. We're really mid-market, laser focused. The actual thing that I would say that would be the benefit of Prophix against Adaptive in that situation is that we are privately owned. We are not looking to be acquired. We're not looking for equity or angel investment. We really build our product around our clients' requirements and what they need to see next and how we can keep them happy and getting benefits out of the software. One thing we can maybe try and send out as well after this presentation, we actually have actually, I don't think we will be able to, unfortunately, just because it is through our customer portal, but we actually have a sharing board where people can post ideas and vote on what gets put into our product roadmap. So definitely very much we're focused on where our clients are today and where they want to be, and not to say anything against Adaptive that they would say otherwise on that, but definitely their focus is on their overlap between Adaptive and Workday and making the best experience for those clients, which really is the right thing for them to do as well.
Okay, I think we're hitting the 1 hour mark here. So for those of you who want to stay, I understand that you've got an interest, and I think both Scott and Jamie are here for another couple of minutes. And for those of you who have to drop off, I understand that too. So we've got a couple of questions. Again, for everyone who's stuck with us so far, thank you. And we're going to continue on for about another 5 minutes or so, and then I think we do have to call it a day. Okay, here's a question. I see that you have statistical accounts listed in your demo. How are they used in your system for cash flow forecasts?
Great question, and I'll field that one again. Sorry, this is Jamie. So essentially within those roll-ups that, again, kind of referring back to our model manager, we're actually able to create another subsection called our statistical accounts, as you noted, and we're able to apply the same calculation logic using statistical accounts as we would for any other type of account. So what that means is that while we might have a statistical account that's going to be a ratio for our actuals, so inventory turns, how many days elapse before we completely turn over our inventory. In our actuals, that's going to be a ratio. That's just how long inventory goes in versus goes out. We write that calculation in referencing those accounts, and we're off to the races. When it comes to planning and forecasting, that actually might be a driver that we would say, okay, in a best case forecast, we're going to reduce the number of days, and in a worst case forecast, we would increase that number of days. And we would actually write in a different calculation logic then to spike out our inventory tracking. So a lot of flexibility. I hope that answer was somewhat relevant to what you had been thinking, but statistical accounts are actually treated very much like any other account in Prophix, just that they're not necessarily being populated from another system. It's something that can be entirely user driven to do driver-based budgeting or to provide ratios on actuals.
I think that's one of the great advantages of having what I call a systems-wide approach. There are a lot of ratios that are in spreadsheets, but my ratio is calculated differently on my spreadsheet than somebody else's ratios. So how do you actually combine those, or how do you really know what good is if everybody has, I'm measuring inches, you're measuring metric system? It really is not a good way of looking at your entire business. Okay, here's I think a last question, and then I think we're gonna close it down.
Yep.
System admin, like Hyperion, it requires systems admin with programming language backgrounds. For TM1, Excel super user from finance can manage it. What about Prophix?
I would say Prophix is definitely, there's no IT background required. There's no coding or scripting. 90% of the admin role in Prophix is actually going to be learning the navigation of the system. So where do I want to go if I want to do a data refresh? Where do I want to go if I need to build a new report and things like that? I would say Excel knowledge is handy, but not required. Most of the calculations that we do write into the system, as you saw there, are actually using the same nomenclature as Excel. And again, just referencing, rather than cells, referencing account codes. I would really say that the biggest knowledge base that you need to have in order to be an admin of Prophix is going to be of your own internal company's reporting structures, chart of accounts, and budgeting and forecasting logic. Because if you have all of that, then like I said, it's really just learning the navigation. I would say you'd be at a disadvantage, on the other hand, just being a Prophix expert coming into a new client and trying to build in, like, for example, if you were to hire somebody to be your Prophix admin, I would say you'd be better off having an admin who's actually been at the company and involved with financial reporting and planning for a while.
I found the same thing. I mean, you're really faced with an interesting conundrum of, you want a systems person who knows finance or a finance person who knows systems. and I guess I have a bias, but I think you need someone who really understands your company and the finances, and certainly knows systems. Now, having said that, maybe what you're really looking for is two people, at least for a short period of time, because there's certainly things that I would never want to face on my own when it comes to certain systems requirements or other understanding of bandwidth and communications and even security. So I think you do need a team approach here.
Yeah.
I'm not sure the person could ever do it all.
No, that's a great point. And I mean, one thing I will say that 95% of our customers take advantage of is that we have a support program that goes beyond technical support, and it actually is with Prophix consultants who've implemented the system dozens and dozens of times across different clients, across different industries. And you have the access to book appointments with them, exchange emails with them. So really that's where you'd be going, okay, I want to build this very sophisticated planning model for cash flow. You would be better off again to know the logic by which you want to construct that cash flow and be able to call somebody who's a Prophix expert rather than have a Prophix expert that you need to try and educate on cash flow building.
Sure.
So I think to Bruce's point, yeah, it's usually not one or the other. But what most of our clients do is they're using somebody who's finance savvy and knows the organization well, and leveraging Prophix again on kind of that system expertise level.
Okay, I think with that, we're going to wrap this up. Jamie and Scott, thank you very much. And for our audience, thank you. Obviously, if you have questions, you can address them to me or to Jamie or to Scott. And especially if they're very specific to your company, probably best to do those offline. So with that, I am going to close down the webinar and hope to see you on our next webinar. Thank you very much.
Thank you very much, Bruce. Thanks, everyone.
Thanks, everyone.
Thank you.